We're off to a really crazy start for 2024, but why? Interest rates are up. No one can afford anything. So why hasn't the market crashed without fear mongering and without pumping? I'm going to try to explain exactly what's going on using hard data. Let's get into it. Hi, my name is Adam Nadler. I'm the owner of Vision Real Estate. Thanks so much for tuning in again. And if you haven't yet, please feel free to hit that subscribe button right below this video and join our community. And don't forget to hit the like button so this video can be pushed out to more people like yourself. So being on YouTube, I know that everybody in my comments is always anticipating doom and gloom, a big crash, and frankly, with justification behind it because, well, we've seen the most aggressive 12-month hike cycle of interest rates in Canadian history last year, as well coupled with the unaffordability of housing with prices really not moving that much. And so everybody's thinking that eventually something's got to give. Eventually, we have to see a correction so that people can afford homes again. But why hasn't this happened? Let's talk about the numbers. The data really paint an interesting picture of exactly what's going on with the market. To start off the year, we've actually had an extremely strong January when it comes to sales volume. Sales volume was up 37% this January compared to January 2023. And if we look at that month over month, it's still up 9.6% compared to the month before that. But when we look at average price has slipped a little bit. We only saw a 1% drop in price compared to January 2023. But when we look at it month over month, we saw a 6.5% drop in prices since December. So what is happening here? We have a ton of volume in terms of sales, but prices are slipping. Those two normally do not go hand in hand. Normally what we see when we see the Toronto Real Estate Board slip in prices is a sharp or sudden drop in sales volume or a lot of new listings coming onto the market. So is that what we're seeing? Are we seeing a lot of new listings flooding the market? And well, the answer is kind of. This January, we had 6.1% more new listings hit the market compared to last year in January, and the sales to new listings ratio was only up by 12%, meaning we had a lot more listings come to the market this January than last January, but we also had a lot more sales volume to meet that supply. So then why would there be so much more confidence for buyers to go out and try to purchase homes when prices are slipping? Well, this could be an indication or signaling that we just saw recently from Jerome Powell in the US, as well as Tiff Macklem with the Bank of Canada, that interest rates would probably start to come down this year. In short, people are guesstimating that we're going to be bottoming out if we haven't already. And that can be indicative of what we're seeing here because ultimately the Toronto market moves with sales volume and price usually in cohesion. When there's a sharp drop in sales volume, we usually see prices start to fall really quickly as buyers start to exit the marketplace and sellers who are still on the market have a bit more trouble selling. However, here we're not seeing that at all. So what we may be actually viewing here is potentially the bottom of this particular cycle. Given that cycles typically last about 2 years when they drop in the Toronto real estate market over the last 2 decades, this timing would line up historically. But the fact is that we're not out of the woods yet. And that if we did see a huge influx of listings hitting the market all at once, that could cause massive ripple effects and potentially a crash in prices as interest rates haven't come down yet. But this is where I have to hesitate a little bit about tipping my tinfoil hat to all the people in my YouTube comments section about the market crashing. And that's because they always have the same hypothetical story of all of these houses being unaffordable for people, being pushed onto the market, or going to power of sale, otherwise known as foreclosure in the United States. The fact is that banks do not want people foreclosing on their homes. The bank's portfolios are made up of mortgages, and they do not want the assets that the mortgages are based on to be devalued because that would devalue the bank itself. So all of the A lenders that we have in Toronto, the big five, they are not going to foreclose on people if they can avoid it. And they have tons of tools that they can use to avoid foreclosing on people. They renegotiate when it comes to renewals. The banks are trying to kick the can down the road until prices recover, because ultimately we've had so much immigration in Canada that we are in lacking of housing, and eventually that demand will start to catch up with us. It is not in the bank's best interest to start devaluing all of their assets by pushing them to market, not to mention the political headache that would ensue. But higher interest rates have affected people, and there have been some power of sales and foreclosures hitting the market. So where are they coming from? Well, when you look into the actual listings themselves, they're coming from B lenders, not from the big five. They're coming from private lenders who are lending out at rates far and above what the banks were lending at. Private lenders are looking to take properties to market if they can to recoup their costs and cash out their loan. And because of that, over the last year and a half, since interest rates have started going up, we've seen power of sales increase slightly, but only from B lenders. And most of those have cleared out by now. Because we have so much immigration, the demand has been pent up.
You know, many people tend to blame municipalities for the shortage of housing. And clearly there are many reasons and many people to blame why we are facing that shortage. But one of the issues is simply a disconnect between the forecast and real life. Just an example, you know, it takes municipalities about a decade to prepare for new units, you know, because it's very complicated, very long period. You know, you have to get the land, you have to sell the land, you have to service the land, and then you have to sell it to developers. It takes a lot of time. So they need to know what to plan for. So if you look at the forecast 10 years ago, and they said, okay, what will be the population in 2023, 10 years ago? It was short 1.4 million people. That's a big number.
Yeah.
So those municipalities are planning for X, and you get X plus 1.4. That's a significant change in the plan that they didn't really forecast. So you cannot plan for something that is not in the plan. That's the point that I'm making. And therefore, one of the reasons why we have a housing crisis is because we have a planning crisis. And that's something that we have to fix.
And even in the most recent data that we got from the CMHC talking about the gap when it comes to housing specifically over these next few years, talking about the need for 3.5 million additional units by 2030, you think that is potentially out of date already, Benjamin?
Not potentially, it is up to.
It is.
Yes, it is, because the base population that they use was 700,000 lower than what's really happening because of the increase in non-permanent residents. So we have a situation in which this is a dynamic goal, a dynamic number. The 3.5 belonged to 2-3 years ago. The real number, if you update the actual numbers for 2022, 2023, is close to 5 million units that we are in shortage. So it's complicated, but one thing we know, we have to build a lot. We have to increase supply significantly. But at the minimum, we need plans that are consistent with reality. And therefore, we need a much more dynamic population growth forecast, not every 5 years.
The demand of people who need homes, as we do have a housing crisis, but can't afford homes because prices are too high, will eventually capitulate to higher prices if their purchasing power is increased by lower interest rates, which is exactly what they're anticipating. And it's not just the buyers, it's also all the major economists, as well as the Fed and the Bank of Canada later this year. So we can expect sellers as well to sit tight and wait for better times, which they have been doing. So although we're not out of the woods yet, it's still looking a lot better than it was a year ago for the Toronto real estate market. But hey, that's just what I think. Let me know what you think in the comments below. Do you think that we're still headed for doom and gloom collapse? Let me know what you think. I'd love to know what your take is on the market. I try to be as objective as I can and not pump too hard or not fearmonger too much just to get views. But hey, I could be wrong. I have been wrong before, and I'd love to hear what you think. Thanks for watching again. Don't forget to like and subscribe, and I'll see you next time.